Hi students, welcome back my video. And past video I teached about the meaning of taxation and one graph also describing about the government revenue before GST implementation and after GST implementation also. And now how GST works, the input tax credit mechanism. Input tax credit ITC, it is a very important element to collecting the taxes. And right side the picture will explaining about the taxation. We have a tax case. It is a profit mode, it's called as. First of all, we need a tax creditant from the customers through the goods and services also, because we have a daily routine. We will purchase and use everyone will use and purchase minimum one good or one type of services. It will mandatory for routine life to run every people's also. And this method of collecting GST, I mean goods and service tax, is a very easy and very important thing to collecting the taxation. And it is the one part of a simplified method, and another one is it is an unified structure collecting method in GST. And then it is also it will gives a very valuable impact, and it will give a good revenue stage our government. And we have the four classification, that is the input tax credit mechanism, and how GST works, that is also how GST working in India in after GST implementation and also. And then taxes are collected throughout the supply chain, because right side picture describing very clearly supply chain is a very important thing for our taxations and everything also. Because the meaning of supply chain is first we production some products, we have to reach the customer. We have a lot of stages to throughout that product traveling duration. First of all, after manufacturing the product, that will going to the wholesaler, and then going to the retailer. After that, that product going to reach the customers. And also we have a three various subtractions in the product traveling path, and that's why we have the many trolls in the product traveling places. And this is collected throughout the supply chain method. And also the product also taxed to reach at each stage, because each stage we are collecting the taxes also, because we going to implement the proprietor for manufacturing the product. And then the government allotted, the wholesaler also have to pay the tax amount, and also retailer also pay the tax amount, and also final stage of consumer also have to pay the tax amount also. So if we purchase one product, we have the four segregation of tax paying on each product is also, because wholesaler productions proprietor taxes, proprietor providing tax, and wholesaler tax providing tax, and retailer providing tax, and final consumer paid tax. All taxes are giving, it is a each stage system. It is a very effective to collecting the revenue from Indian peoples regarding the supply chain method. And that business claim credit for tax paid on inputs is, and this reduces their bounded. And input tax credit is the one of the claiming method for paying the input credit system to the business. And also some boundaries are there to reducing the tax ratios also. It is variable for and affordable for a product by product. And the another way of GST working method is only value added at each stage is tax, because every product having to move various path in the travel. So we have to collect the every stage in a product for each stage method. First one I discussed. And this product is, that products is having a stages improvements, that is called as every stage will that proprietor also or wholesaler or a customer have to pay the value tax amount, that is also including the value addition tax. That is not a one product tax, that is a value addition tax. So that is the high range of revenue to the government, and the prevents double taxations. Here no the double taxation, because each and every person will paying the tax separately. So that's why repeated taxes payment not possibilities to here. And the final tax burden falls to the customers, because wholesale first 2-3 points is we're discussing the wholesaler need to pay and retailer need to pay, proprietor need to pay. Yes, they all are need to pay, but the whole tax burden will go to implement the customer only, because the production rupees is 2 rupees, but the final good production rupees is 10 rupees or 5 to 6 rupees. We have the large of difference, thrice the differences in the final good product, because proprietor will earn some tax amount or 1 rupee or 50 paise also, and wholesaler earn that 1 or 50 paise also, and retailer also earn that 1 or 50 paise also. So the all amounts are include the final product is 5 rupees or 6 rupees is a reasonable price to buy that product. So that's why we have to segregate the each and every person involving that product selling system. They all are also to pay the product tax, but they are not having that own money to pay, because the customer falls to burden the final product tax. They are splitting that amount, then have to pay the taxation also. It built into the prices, final good products, that overall burden going to the customer, and the product prices, final prices is it will taking the end customer barriers burden also. So the overall product tax fall in the customers, and the all person also need to pay the taxes, but their own amount the person not going to pay. The customer will paying the product amount, the another persons and middlemen is also splitting that amount to pay the taxes easily. This is how the GST works is in India, and in implementation it put tax credits and mechanism also. And this slide going to well known about the taxation and works in GSTs as also. I will see you on my continuity video.